Hello and welcome to Business 360. I'm Shireen Pan. The headlines that we're tracking for you this evening. Global markets continue to reclaim lost ground. President Trump signals more tariff concessions after giving a breather to U.S. tech companies. Stocks gain across Asia and Europe. The Sensex and the Nifty gained 2% thanks to strong global cues. Mid-caps outperform. All sectoral indices close with gains. Shares of auto and component makers rally after President Trump hits at some tariff concessions, including a temporary pause. But Trump signals fresh tariffs on pharma and semiconductors as trade officials launch an investigation.
You see the meeting today? Is that wonderful? That's a lovely meeting. The meeting, like trying to figure out how do we screw the United States of America.
President Trump lashes out after China's President Xi Jinping makes a diplomatic outreach to neighboring countries after signing deals in Vietnam. Xi Jinping heads to Malaysia. Beijing orders Chinese airlines to stop taking deliveries of Boeing jets. India's trade deficit widens to more than $21 billion in March due to a sharp rise in imports. Commerce Ministry says India and the US have signed the terms of reference for a trade deal. The first tranche of an agreement is likely by September or October this year. India's weather department predicts an above-normal monsoon for the year. The long-period average of 105% is higher than the 103% estimate by private weather forecaster SkyMet, which expects a normal monsoon.
India century, and I'm not backing off of that. I really do think this is the moment for India to lean forward.
The top brass at McKinsey bet big on India, say the tariff war presents an opportunity to build resilient supply chains. Adds India's manufacturing is nowhere near its potential and remains an attractive proposition for global CEOs. That's an exclusive. Mark Zuckerberg takes the witness stand on the first day of a historic antitrust trial in Washington. Defends Facebook's parent Meta from allegations of creating an illegal monopoly. The U.S. authorities are seeking to unwind the acquisition of Instagram and WhatsApp. The U.S. government freezes federal funding worth over $2.2 billion to Harvard University. This after the institution rejects a list of demands from the White House, including changes to its governance structure over alleged anti-Semitism concerns. Harvard president says the university will not surrender its independence or relinquish its constitutional rights. A special investigation team constituted by the Andhra Pradesh government has ordered the freezing of bank accounts of allied blenders. As per sources, the SIT is probing allegations of bribery during the previous Jagan Reddy government. Urban Company is set to cut the size of its proposed IPO by 80% due to recent market upheaval. Sources say the company will file papers with SEBI next month to raise 528 crore rupees. The issue will value the company at over $2.5 billion. Southern states top the annual rankings on the delivery of justice. India Justice Report puts Karnataka on top, followed by Andhra Pradesh, Telangana, Kerala and Tamil Nadu completing the top 5. Uttarakhand, UP and West Bengal rank at the bottom. Well, the big macro data of the month, retail inflation has eased in the month of March. Lata standing by now to take us through the inflation internals. Lata.
Oh, it's an excellent number, 3.34 compared to a CNBC poll of 3.6%. I mean, 3.34 is a distance below the mandate given to the Monetary Policy Committee, which is 4%. So now if you look at the Jan, Feb, March, the whole quarter itself, the average falls to, below 4%. So that clearly is, the average actually falls to 3.73. And that is, again, a good % below the RBI's mandate. For 3 months in a row, the average is standing lower. The market's enthusiasm would be that the Reserve Bank clearly a June rate cut is given, but more importantly, they will perhaps now expect that the governor may even go for a 5.25 as the end rate of the cycle. Until now, everyone was expecting 2 more cuts and therefore the repo rate going to 5.5. Now the market will push for 5.25 because clearly for the full year, inflation is likely to remain well below the 4% mark. That's the indication from here. This 3.34 is quite a shocker, and that's been delivered primarily because of the fall in food prices to an average of 2.69. I mean, it's a number we have not seen in many years, perhaps in 2-3 years. We've had between 8 and 11% food inflation, so falling to 2.69 is a sight for sore eyes. I mean, it's an across-the-board fall in food prices, primarily, of course, in agriculture, in vegetables, but more so in, cereals, milk, Eggs have fallen considerably. It's a minus 3.16 year-on-year egg prices. We've also seen a sharp fall in vegetables, minus 7% year-on-year. Pulses, again, a very important component, weighty component in food CPI, minus 2.73. And finally, a big fall in spices as well at minus 4.9. So there's an across-the-board fall in prices. Weighty items like cereals, just about 5.93, below the 6% mark. So this is going to go down as an excellent number for the bond markets. The expectation, of course, now will be that the Reserve Bank will be ultra soft in this cycle of rate cutting. All told, a good reason for a rally in the bond markets.
All right, Lata, many thanks for joining us. That's the inflation picture looking good, so it should give comfort to both the RBI and the government. Stock markets regaining some lost ground across the world after President Trump's tariff flip-flop from Japan to UK. Stocks clawed back some gains after the recent brutal sell-off. Gains are largely on account of President Trump pausing the sweeping tariffs on mobile phones, computers and semiconductors that are largely manufactured in China. Now, Trump has also hinted at potentially pausing the tariffs on automobile makers and auto component makers. However, he did double down on imposing tariffs on pharmaceuticals and semiconductors. That's the global market picture for you across the board. Nikkei, the CAC, the Kospi and the Shanghai, all green. Shanghai flat. US trade officials have launched a probe into pharma and semiconductor industries before taking a decision on potential tariff increases. So that is the latest there as far as the tariff war is concerned.
We don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's inversely proportional. The higher the tariff, the faster they come. And yeah, we're going to be doing that. That's going to be like we have on cars. We have, as you know, a 25% tariff on cars. We have a 25% tariff on steel and aluminum, and that's what that category fits right now. Looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places, and they need a little bit of time because they're going to make them here, but they need a little bit of time. So I'm talking about things like that.
Well, that's President Trump. And back home, Indian markets playing catch-up again after a trading holiday yesterday. The Sensex and the Nifty have gained over 2% in what has been a broad-based relief rally. Mid-caps and small-caps did fare better than the blue chips. The Nifty closing 500 points higher. 1,500-point move up on the Sensex. Mid-caps up by about 1,400 points and a 1,377-point jump there on the Nifty Bank. So what we have now seen is the markets regaining all the losses since President Trump's so-called Liberation Day, the day that tariffs were announced, which was the 2nd of April. Prashant is standing by now to wrap up the market action for us. Prashant, relief rally globally at this point in time, and India no exception. Is the mood changing in the market, or is it just now used to absorbing the measures announced by President Trump on tariffs and then the rollbacks?
A really strong day in response to 2 days of good days on Wall Street. So you were reacting to about 2.5% gains on the S&P, and the market did not disappoint. So about 2.5% on the Nifty and the Nifty Bank, but the mid and the small cap indices did even better with about 3% apiece there. The top sectoral gains came through in some of the most beaten down names. Real estate as an index was up almost 6%. Defense came up about 4.5%. You had the capital market index, which was up 4% today, led by stocks like 361. I'll get to stocks in just a bit. But you also had the auto index and the metal space, which continues its repair and recovery after what we saw last Friday. I'll go to the large cap pack. IndusInd Bank was a top gainer, started slow, but then picked up quite a bit of gains, about 7% higher by 330. Shriram Finance was up 5%. Tata Motors, L&T, Dr. Reddy's, Axis Bank and Adani Enterprises were up about 4%. About 8 names with gains about 4% plus. On the downside, not very much at all. I mean, the biggest loser was ITC with about 0.25% in terms of a cut that came through. So not very much. 10:1 advances to decline ratio, and that's the kind of move that we had. What was up in the broader space? Mazgaon Dock was up 10%, Data Patterns 12%, Sai Life was up 13%, Anantraj about 9%, Goldium after Friday's 20% move, another 16% today. You had Inox Green, DB Realty, Fino Payment Bank, and so many others which went up on solid volumes as far as today's session is concerned. Again, on the downside of the broader space, there was an Aster DM which was down 2, Atul Limited and a Max Healthcare which were minor losers. Otherwise, a very, very good session in response to last 2 days of much better and stabler markets. Back to you.
Prashant, many thanks. Gold prices, meanwhile, continue to remain firm as uncertainty over the economic impact of President Trump's tariffs boosted the bullion safe haven appeal. Investment flows into Chinese gold exchange-traded funds so far this month have exceeded those for the whole of the first quarter. Crude prices edging higher after Trump suggested that he could offer automakers some relief from the 25% tariffs on imports of vehicles and auto parts. A rebound in China crude oil imports also supported prices. Meanwhile, cryptocurrencies rallied after Trump announced tariff exemptions for certain electronics, lifting market sentiment. Bitcoin prices hovering near the $86,000 per mark, while Ethereum prices have also seen a move up. China pulling all stops to win over its Southeast Asian allies in order to counter President Trump's tariff threats. Chinese President Xi Jinping headed to Malaysia from Vietnam. The Chinese government has signed dozens of cooperation agreements with communist-run Vietnam, including an enhancing supply chains. President Xi met Vietnam's top leader and called for stronger ties on artificial intelligence and the green economy. Reacting to their meeting, Trump said Xi was in Vietnam to figure out how to harm the U.S. The Chinese president will also visit Cambodia this week.
I don't blame China. I don't blame Vietnam. I see the meeting today. Is that wonderful? That's a lovely meeting. The meeting, like trying to figure out how do we screw the United States of America.
President Trump, and speaking of China, the country has reportedly ordered Chinese airlines to stop taking deliveries of Boeing jets amidst trade tensions with the U.S. Madhya is standing by now with more. Madhya, what could this mean for China's aviation industry? What could it mean for Boeing?
Well, to understand whether a pause on Boeing's deliveries will change anything for Boeing or China, we need to look at China's aviation landscape and how it stands as compared to India. So according to planespotter.com, China has 67 airlines, including passenger carriers, general aviation and cargo airlines. That's more than double of India, which has 22 players, big and small. Now, the next number is even more startling, which is the capacity. China has over 4,000 operational planes, and this includes your wide body, narrow body, as well as the 70 to 80-seater regional planes. Indian airlines put together have only 740 operational planes. So does China need more capacity? Let's look at how many planes Boeing has to deliver. As per Boeing's website, it has to deliver 130 planes to Chinese airlines as compared to 506 planes to Indian airlines, including Air India, Akasa Air and SpiceJet. We also have to remember that Chinese airlines had already placed orders for Airbus and Boeing, and Indian airlines are now expanding their capacity and also facing shortage. So if China market closes, it could also mean early deliveries for Indian airlines, which have been struggling to expand capacity. Moreover, China also has its own plane maker Comac, which has already started delivering its 737 and A320 rival called C919. There are 114 Comac planes operational in China, of which 13 are the narrow body C919. So Comac has a long way to go to match the production capacity with Boeing and Airbus, but as things stand, it doesn't look like a pause on Boeing's deliveries will hit Chinese airlines very hard, as over 4,000 planes makes them seem quite comfortable with their capacity.
All right, Madhya, many thanks for joining us. Time for us to head into a short break, but up next, McKinsey bets big on India, says the tariff war presents an opportunity to build resilient supply chains. That and more when we return. Investors should be prepared to be fooled many more times, warns Morgan Stanley on Trump's tariff plans in a note titled, "Fool me once, shame on you. Fool me twice, shame on me." The global brokerage firm urged investors to buy the weakness and not let their guard down. Morgan Stanley's also cut its FY26 GDP growth forecast for India to 6.1% from 6.5% earlier. S&P Global Ratings expects the growth of major Asia-Pacific countries, including India, China and Japan, to slow by between 0.2 to 0.4 percentage points over the next 2 years if Trump implements implements the reciprocal tariffs. UBS believes the higher US tariffs could delay private capex pickup in India. It also cut its FY26 GDP forecast for India from 6.3% to 6%. UBS downgraded its GDP estimates for China and the US as well. On to a CNBC TV 18 exclusive. The top brass at McKinsey is betting big on India. Global managing partner Bob Sternfels believes the tariff war presents opportunity to build resilient supply chains. Remember, India's share in the US smartphone imports has increased from nearly 8% in 2023 to 13.7% in 2024 after Apple started to assemble phones in a factory near Chennai. McKinsey believes India's manufacturing is nowhere near its potential and remains an attractive proposition for global CEOs. Take a look.
To the future growth potential for India, and you start with manufacturing, India is nowhere near its full potential around this. And you highlighted, I think, a success story. I think you have to hand it to Vietnam in how quickly they moved. But on a relative basis, Vietnam's small, and Vietnam now is facing all of the secondary issues. Labor shortages, supply chain issues, overconcentration, et cetera, that India won't face for a while. And I think this is really the moment to now move from a catalytic change that has started in India about this notion of a strong manufacturing base to now kinking the curve and really starting to drive acceleration at scale. A lot of this volatility could be great for India. And I think there is this moment, and I've been on record before of India's century, and I'm not backing off of that. I really do think this is the moment for India to lean forward. What I hear from CEOs underneath this are a few things that I think are useful in these times. And on the one hand, making long-term decisions on things that may not have long-term assurance is not a recipe for success. And so many CEOs are coming back to a couple principles that at least I hear. One is the notion of resilience. How resilient is my company to future shocks going forward? Because these may not be the last. And I'm hearing more and more, I may need just to plan for a world that is fundamentally volatile as opposed to hoping for a return to some kind of normality. And so how resilient is my company? And the resilience notion is not just defensive, but how do I have enough capital, enough talent to make a few bold bets while I protect myself from shocks? So I hear resilience as one. The second thing is this notion of timeframes. Will the decisions that I'm making be durable over the time frame of that investment decision? So if it's moving a supply chain, if it's developing a natural resource, if it's making an R&D decision, these are often decade-plus decisions with decade-plus payback cycles. And so what I often find is, how do I marry the return profile with the volatility profile to say, is this something that is robust no matter what? So take a practical example on this. Many are asking around the world, how much of my supply chain should I have in the US, right? Given tariffs. Well, if you back up, we had done some work in the pre-tariff era that said supply chains aren't resilient enough, that COVID and the Russia invasion of Ukraine showed that we actually had fragile supply chains. And there was a logic for moving part of your supply chain closer to the source of demand. The US is the largest source of demand, irrespective of tariffs. And so several CEOs are coming back to that foundational logic to say, would I make this decision even without tariffs? What portion of this is robust long-term, based either on resilience logic, long-term demand logic? That's a practical example of this time frame piece. And maybe the third thing I'm hearing, if it's resilience, time frame synchronized with the investment decisions, the third is this notion of where are no regret moves just to speed up? And in particular, one of the topics that's around that is the implementation of new technologies to change my business. No matter what happens in the world, I am going to have to implement technology faster to change my business. That's a no regret move. And so I'm often asked the question, Bob, what are the no regret moves that I can be implementing irrespective of these external stimulus that's going on out there?
And you can catch that entire conversation with McKinsey's global managing partner, Bob Sternfields and Rajat Dhawan on Global Dialogue at 6 p.m. and 9:30 p.m. right here on CNBC TV 18. How's India Inc. placed as Trump's tariff winds blow across continents? We spoke with ITC's top boss, Sanjeev Puri, Apollo Hospital's MD, Sunita Reddy, for their take. Take a look.
If you look at healthcare in the US and pharmaceuticals, 47% of the generics that America uses are from India. And this results in a net saving of $270 billion. So if they were to put a tariff on that, I think it will become far more expensive for the US healthcare, which is already at $15 trillion. So it would be a huge expenditure for the US.
It will open up a lot more opportunity for interest for the industry as the bilateral trade agreements get signed. And not only with the US, I think we are hopeful that we should see one with the EU and UK during the year. And that does create a lot more opportunity for the Indian industry, gives an opportunity to integrate with global value chains.
The U.S. Education Department has cut federal funding of Harvard University. As per statements by the department, the Trump administration has frozen Harvard's grant of $2.2 billion as well as multi-year contracts worth $60 million over anti-Semitism concerns. Harvard University accused the Trump administration of overstepping its authority. The university's president, Alan Garber, said Harvard will not surrender its independence.
U.S. President Donald Trump's administration announced on Monday it was freezing $2.3 billion in federal funding to Harvard. The move came hours after the university rejected numerous demands from the Department of Education, which Harvard President Alan Garber wrote in a letter would allow the federal government to, quote, control the Harvard community and threaten the school's values. The funding freeze comes after the Trump administration said last month it was reviewing $9 billion in federal contracts and grants to Harvard. That's part of a crackdown on what it says is anti-Semitism that erupted on college campuses during pro-Palestinian protests over the past 18 months. The administration has already frozen hundreds of millions of dollars in federal funding for numerous universities. It's pressing institutions to make policy changes, citing what it says is a failure to fight anti-Semitism on campus. Deportation proceedings have begun against some detained foreign students who took part in pro-Palestinian demonstrations, while visas for hundreds of other students have been canceled. In a letter on Friday, the Education Department stated that Harvard had, quote, failed to live up to both the intellectual and civil rights conditions that justify federal investment. Harvard agreed in January to provide additional protections for Jewish students. And Garber said in his letter that while the university is taking steps to address anti-Semitism on campus, quote, these ends will not be achieved by assertions of power unmoored from the law to control teaching and learning at Harvard and to dictate how we operate. To ease any funding crunch created by a cutoff in federal funding, Harvard is working to borrow $750 million from Wall Street.
Well, that is the latest there from the U.S. Now, back home, Urban Company is set to cut the size of its proposed IPO by 80% due to the recent market upheaval. Sources say Urban Company will file papers with SEBI next month to raise 528 crore rupees. Rachna standing by with more details. We saw a similar story play out for Ather with its proposed IPO, and now Urban Company scaling back its plans too.
Sources have told us that home services unicorn Urban Company has secured a shareholder approval to raise 528 crore via an IPO. The company will file its DRHP by the end of next month. While the company had initially planned to mop up 3,000 crore, as you said, market volatility has forced a rethink. A pre-IPO placement with select investors may shrink this offer size further. The IPO, which will include a stake sale by existing investors, is expected to value Urban Company between $2.5 to $2.8 billion, leading the issuer Kotak Mahindra Capital, Goldman Sachs and Morgan Stanley. But on the business front, Urban Company reported a 30% jump in FY24 revenue, clocking in at 827 crore, and the losses have also narrowed to 93 crore rupees from 312 crore rupees in FY23. The company offers a wide range of services from home cleaning, repairs, pest control to beauty and wellness, which continue to be its strongest category. In FY23, home services made up nearly 78% of its total revenue, with product sales, which now also includes native RO purifiers, contributing the rest. The company is also diversifying into new categories like wall panels, smart locks, and is currently operational across India, UAE and Singapore.
All right, Rachna, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Don't go anywhere. We're back in a moment.